Hey, Brian Brown with Summerlin Advisory Group here in lovely Las Vegas. Summer is upon us, but the problems with our customers continue to be some very simple things around accounting and finance, and for entrepreneurs, executives, etc., not necessarily knowing clearly two very specific points. So we're going to cover that today. So over the last 8 months, and honestly for the past 20 years prior to that, whether it's working with a new branch, an area, a region, a new manager, and in this case, us working with our customer base, there's been a continual problem over and over again when looking at your P&L. And we're talking specifically to staffing companies, but this applies to anybody out there. Anybody with a sales team, anybody that produces revenue based on sales, we have to look at two very specific things. And us as the entrepreneurs and executives in the business, those two things very simply are, number one, do we understand truly what our cost of goods sold are? So what all goes in to actually make a sale, right? We sometimes think it's just salary, but there's all the other things that happen that truly give us a cost of goods sold so that we can accurately forecast what really is gross profit. This video, we're going to do two parts here, is your labor cost for salespeople and for your operational staff. It's important to understand you can't make profit if you are not getting an ROI on your team. I was recently just in New York working with one of our very special and exclusive clients, staffing company, and looking at their overall costs of goods sold versus their labor. It was like uncovering albatross after albatross after albatross. So we're going to dive into that. So today, in this first part video, we're going to talk specifically about cost of goods sold. Okay, so let's get into that. So cost of goods sold, by definition, is what you sell something for minus all the associated costs should give you gross profit, right? Your simple P&L. So this is, you're going to hear this from a lot of people called your top line. Okay, so your top line numbers. The problem with top line numbers is it isn't as simple in the staffing industry as my bill rate and my pay rate plus FICA, FUTA, SUTA, workers' comp insurance. There's other costs there that we need to think about. Most recently, again, looking at one of our clients, you have to think that there's all kinds of other associated costs. Background checks, drug screens, okay? Those are two easy ones, right? Clients are requiring you to go out and make sure that's done and completed for any sort of temporary contract or professional services engagement. What we forget about is what else goes into this. Are you factoring your money? Okay, what's that factoring fee? What's that percentage? Is that added into your cost of goods sold? Are you using line of credit money? If you are you putting that percentage into your cost of goods sold? More things you're thinking about. What is your cost of job boards? Now, this is a unique one in the staffing industry. People go back and forth on this often. Is that below the line? Is that above the line? Meaning, is it part of operational costs and expenditures, or is it cost of goods sold? So think about this. To attract that client, somebody spent money. To attract that candidate, you had to spend money. You had to use a job board. You had to use a job posting. You're using LinkedIn Recruiter. You're using an applicant tracking system to do all of this. Think about this from you running your business. If you're putting all of this below the line, are you paying your sales and recruiters too much? Are you correctly putting a burden rate on doing a deal? Because you've invested the money. You put the money out there for the ads. You put the money out there for job postings, LinkedIn, all those other things. At some percentage rate, client after client after client, especially now when money is tight, you have to accumulate that cost to some percentage into your burden as part of cost of goods sold. To get to your appropriate gross profit, some of this has to be accounted for. As a matter of fact, one of our customers we're working with, $100,000 last year on job postings alone. $100,000. Question, what was your actual cost per placement? How did that actually correlate to make money? And they couldn't come up with it quickly. So we ran some numbers. So if you think about that with 300, 400, 500 placements at $100,000 just on job postings, the number is astronomical. And if you're not charging back from that perspective here, you're losing money. Controversial as this might be, because I know conventional wisdom on accounting, okay, would say in the staffing business that you drop this below the line, you put this in operational income, okay? But you're paying a commission. You are paying a commission on an outcome. You have to burden your cost of goods sold correctly. And if you're not, you're giving away money. You are not accommodating for the fact that for that salesperson, for that recruiter to do the job, you've invested a lot of money in this. And putting all of your costs to actually make a placement here. I mean, you think about this, you got onboarding. I forgot about this one. Onboarding, okay? You're with Bullhorn or any of these other firms that have electronic onboarding, time cards, etc. You're paying a fee for this. All of this needs to be loaded up here. You can't have it below the line, okay? Cost of goods sold, make sure you are accounting for everything that goes into the placement and get it up here and get an appropriate gross profit percentage. Give us a call at Summerlin Advisory Group. We can help you sort this out. We've got a very good team of back office professionals that can help. We can guide you to get this correct, get your comp plans back on track, get your expenses back on track, and put you in a better position. Thank you.